Welcome back. Now, in the fourth quarter, the RMB BER Business Confidence Index increased by 5 points to 44. Now, that's the first improvement we've seen over the past 2 quarters. This as morale improved in 5 of the 6 sectors surveyed by the index, with the manufacturing sector doing the bulk of the heavy lifting. And while the overall reading is indicative of a green shoot at 44, still fragile, you see, below the 50-point neutral mark. Keabetswe Mojapelo is a macroeconomist at RMB, joins us with more insight on the findings of the index and what it suggests for business confidence going forward. Keabetswe, hi. It's actually a good figure, 44. And I mean, 5 out of the 6 sectors surveyed giving the thumbs up. This is refreshing news, isn't it?
No, it is, Ray. Good afternoon to you as well. Look, we come from 39, so essentially about 39% of the respondents would be satisfactory with the business environment. But moving to 44, very close to that long-term average, and really moving in the right direction, given that it is broad-based. The breadth of it tells you. And if you look at what has been the motivating factor, that catalyst, is all this good news that has been building up for the year. S&P upgrades, removal from the gray list, a very, very positive and well-received medium-term budget statement, and not to forget interest rate cuts. So you can see all that good news is now really transmitting into business sentiment, and really hopefully this will also fuel investment. At the moment, is it really something that we should be joyful about? Not yet, until we see this sustained improvement and that translating into sustained investment as well.
Yeah, but we saw, I mean, the GDP yesterday, that figure, 0.5% kind of, it's an improvement, it's a green shoot. But you're right, it's too early to celebrate. But after what our president's been saying, after the G20 and all those things you've just listed, this is good news.
Oh, this is good news. If you look at the figure yesterday, you mentioned households doing a lot of the heavy lifting in terms of that GDP print. And also, if you look at this business confidence, new car vehicles dealers, they are quite happy. They've been really having a great year along this year. Retailers are happy, wholesalers are happy. So those 2-pot boosts and interest rate cuts and lower inflation, really seeing a lot of people back in the malls and back to buying. And for new vehicles, we need to also underpin the fact that there is a behavioral change. The move towards Asian budget-friendly vehicles, you know, you've seen them all over the road, and those have been really building up or really driving a lot of these new vehicle sales.
Yeah. Are our American counterparts and also German counterparts being perhaps left behind by all of this? Because you're right, on the index, you can actually see they've jumped 4 or 5 points up, and it's only going to go up and up and up. Have the others skipped a beat here and missed something?
Well, if you look at globally, we do have sort of different problems. Domestically, our problems were really linked to failures to pass a budget, energy issues, logistical hurdles, which still are part of us. Globally, a lot of the stress right now is really around those trade uncertainties. And if you look at all these factors and bringing them back home, a lot of them have been ameliorated for the South African case. So we passed the budget, we've passed a very good MTBPS, we're able to cut interest rates because we've contained inflation, and everything put together, you then have an upgrade. We are basically living a very good story. Will this continue? We're hoping this is the beginning of an improvement into much better sentiments and translating into more investment and more growth.
Yeah. Where are we looking for inflation rather? I'm looking at retail inflation. I'm looking at inflation at the service store. Where are we looking with that? We've changed our inflation target. We're now sitting at the, 3%, give or take either way. Is this realistic, and what are we seeing?
Well, if you look at inflation, there's still some upside. Food prices, for instance, you'll always have those shocks, and we're still really reeling with this foot and mouth disease. But then we also have this good rain. We've had rain almost 3 weeks nonstop. That's positive for food prices. And if you look on the goods side of things, we have this imported inflation coming from China. That is also keeping prices quite low. And then you also look, I mentioned vehicles and also the buoyant sentiments from vehicle dealers. Vehicles that are being imported as well, they are also keeping a lid on purchase of vehicles. So you have a lot of these factors at the moment. A strong rand, very low oil fuel price increases. So all these components, the confluence of everything really means that you do have some sort of containment in inflation at the moment. We see it really next year coming out at about 3.4%. We still see it along this +1 band to this 3% that the South African Reserve Bank is now mandated.
Yeah. You know, reading through this report today, I couldn't help but think to myself, the golden question, will this translate into job creation? Because that's what we're looking at here. We're looking at GDP a little bit bigger. We're looking at all these figures, bar one going up, 5 out of 6. Your thoughts, job creation, we've got to see something here.
I mean, if I have to take you back to history, when we were looking at the BER Business Confidence around 2004 to 2007, this was, the peak was about 77%. And that's when we had this major growth rally in South Africa, if you remember. And that also was accompanied by very good, or rather job creation, and a much lower unemployment rate. I think it came down to even close to 23%. So what it tells you is you need this rally in business confidence that will translate into investment. The reforms that are coming in will also really, the business sector will capitalize on those, and really private sector participation will result in more investment. And ultimately, we do see growth lifting much higher. We have it at about 1.5% for next year, going to close to 2%. So that growth rally, accompanied by big investment and also improving sentiment, should somehow create a lot of jobs going forward.
Sure, Keabetswe, I really do hope so. Thank you so much for taking the time to chat to us on Business Lunch. We'll chat again soon. Thank you. That was Keabetswe Mojapelo, macroeconomist at RMB.